Today in Higher Learning, last month it was announced that student loan debt had reached the $1 trillion mark. So it was no surprise when President Obama announced plans to reform the federal student loan program just last week. But some are worried that the steps are not enough because they fail to take on the problem of private loan debt. Here to talk about it is Peter Kerwin from the Rhode Island Higher Education Assistance Authority. Good morning, Peter.
Good morning, Michaela.
All right, so what exactly did the president propose, and is it enough?
Well, you know, we're a year away from a presidential election, so it's no accident that the president was out there proposing changes to the student loan system a week after he had proposed changes to the home mortgage system to help homeowners who are, underwater with their mortgages. And what he's done is there was a change in 2010 to the federal student loan system where it used to be that loans were offered by either the U.S. Department of Education and banks working with state guarantee agencies. Well, they moved that to a direct lending environment total. So that means direct lending, it's all done by the U.S. Department of Ed. And what the president proposed last week was you still have a situation now because of that old system where about $480 billion in loans are under that old system, and you've got 5.8 million students who are having to pay back either those U.S. Department of Ed loans and loans from the banks. It's a split portfolio. And what happens when you have split portfolios is students make mistakes. They're getting more than one set of paperwork. They've got the bank contacting them, they've got the U.S. Department of Ed contacting them. They slip up, they make mistakes, they default on their loans. So what the president did was, we said we're going to consolidate those loans under all U.S. Department of Education. It's going to be coming from the U.S. Department of Ed, one set of paperwork that the students get, and it's going to be a reduced interest rate as well. So that's really helpful. Now,
this seems really good, but how about the bad news? I mean, there's going to be another end to this.
Well, the problem is, as you mentioned, it's the private loans. It doesn't really address the whole issue of private loans. I mean, you've got the federal loans, which are great. Generous repayment terms, there's a lot of options there for students. Unfortunately, the private loans don't come with those benefits for consumers. And a lot of students are taking on private loans now because of the rise in college costs. And you've also got the for-profit institutions. They're pushing a lot of kids into private loans. This didn't really tackle that problem. The hope is that the Consumer Financial Protection Bureau, that entity which was created out of the Dodd-Frank Financial Reform Bill, is going to really focus on some of those predatory lending practices, especially in the student loan arena, and hopefully that entity will look to this and try to tackle that.
All right, so there is hope.
Exactly.
We'll see what happens. Peter, thank you so much for joining us this morning.
Michaela.
For more information from College Bound Fund, you can head to foxprovidence.com.